Hi, I'm Working Dad Trader, and in this video, we go over my Trading 212 portfolio for August. This is a series that I've been running now for quite a few months, where every month I post what's happened during my Trading 212 portfolio. We look at basically my journey since whenever I started. I can't remember now the exact date, but it was quite a while ago. And we go through and we look at what's done well, what's not done so well, and I discuss my opinions on my portfolio. So let's dive in and have a look for August. So August has been an extremely difficult month for my portfolio, generally down to the Chinese stocks that have taken a really big hit again. They've been taking quite a big hit for good 3 or 4 months now, but August they really took a big hit where a lot of, I think, people sold out, especially big investment firms like Cathie Wood sold a lot of positions, and that was quite a public thing. I think that caused a lot of panic, and people sold out. I've done a video on that as well, so if you want to check that out as well, go ahead. That's great. So yeah, August has been a hard month, and like I say, my Chinese stocks taken quite a battering. My portfolio sits at 9.5%, which isn't too bad. It started the month around 12%, and it got down to as low as I think 4.5%, where it really took a beating. But it's recovered somewhat, and throughout that time period, I've also added to a lot of my Chinese positions because I see it as a great opportunity. That's just my own opinion. If we look at some of the stuff I've sold, I've only sold one stock in the last month, and that was my iShares Global Clean Energy stock. I'm a massive green fan and a vegetarian, etc. And I'm all for saving the planet, but I've been monitoring this. I've held the stock for a long time. It was in profit, and it's just not really. If anything, it's declined. And at the moment, it's going to go onto the watch list. But I decided to cash in on that at the moment and take the profit and just keep it on the watch list because it's not really done a much this year since the start of the year. It's just sort of gone sideways and down. So a lot of energy stocks have also done that. Clean energy stocks have had a really disappointing 2021. So for the minute, I decided to cash out on that, take the profit I had, and keep it on the watch list. Obviously, I'm looking at that sector because I would like to invest, but at the same time, I also want to make money, and that wasn't making any money for me at the time. So it goes back onto the watch list, and that's the reasons for that. That's the only stock that's come out of my portfolio. And the new ones really were Key Holdings, which is another Chinese company. I've also done a video on that one, so if you want to check that out, I took advantage of that as well because I thought that was quite a good company at a cheap price. Um, Again, Chinese stocks very controversial, but that's what I decided to buy into, and I've just been adding to the positions of Alibaba, Tencent, and JD.com. So that's all I've been doing really throughout the month. Like I say, it did get down as low as 4.5%, but currently now we're sitting at 9.5%. So I'm hoping, I keep saying this every month, that the Chinese sort of situation has bottomed out, and most people that wanted to sell have now sold. Okay, so if you look at Alibaba, at the moment my Alibaba position is minus 26.5%. Alibaba's obviously taken a big hit as well, and that's probably one of the biggest companies in China. It's down at 26.5%. It really is quite low. At one point, I think it got down to $161, and it could go lower. But at the moment, I'm hoping it's hit bottom, and I'm hoping now we're going to see some upward momentum at last. Um, Alibaba, when you look at the financials, is fantastic. The fundamentals are fantastic. It's a humongous company, massive, massive company. So I'm still really confident in that stock. And I just think all that's happened over the last few months is just noise in the market. And yeah, I'm happy in that position, although it's down. JD.com, interestingly, JD.com in my position, I'm 5.9% up, even though JD.com has taken a hit. Um, I bought down quite low on that one, so I'm really quite happy with that one. I'd say at the moment it's that one's in a profit by nearly 6%. Um, Interestingly, over the last week or so, Cathie Wood's ARK has bought back into JD.com after selling all their positions. They've now gone back in, so maybe she also thinks it's at the sort of bottom and she sees some more confidence to get back into the market. So yeah, we'll see. Again, JD.com is another massive Chinese firm with great credentials, great fundamentals, great financials. And again, I'm really confident to hold that company. The next other Chinese company I hold is obviously Tencent. That's probably the worst performing stock, which is minus 42%. So that one is really down. That one's taken a real hit. There's been a lot going on lately, and there's been a new law recently passed in China where children can only be on games, video games, Monday to Friday, I think it is, only for about an hour a day, which is quite a sensible idea. But obviously, Tencent has a massive part of Tencent's business is a lot of gaming as well. So it's going to be interesting how that sort of affects Tencent. They've got a lot of other things going on in the company, not just video games, musics, and all those sort of things. But at the moment, it's minus 42%. But again, Tencent is huge. They have so many strings to their bow, and they've got so many businesses that there are other revenues for them to make money in. And again, the financials are fantastic. The fundamentals are great. The customer base they have is huge. So I think I hold at least three of the biggest companies in China, and I'm really, really quite happy with the companies I've bought into. My portfolio in total of my 4 Chinese stocks that I hold, including a new one, which is Key Holdings, which is already in profit, which is good. It comes into about 19.5% of my portfolio for those 4 companies. So we're looking at nearly 20% of my portfolio is just for Chinese stocks. And obviously a lot of the Chinese stocks in the market is down. So that is having a drag onto my portfolio. But like I say, I'm still 9.5% up, even with that 20% of my portfolio being dragged down by the situation in China. So overall, I think that's pretty decent. And like I say, it's going to be a long hold. I'm a long-term investor, and these Chinese stocks are risky. But I see them possibly not by the end of the year. I thought things would improve by the end of this year. I know we're only sort of August, but there's not many more months this year left. Funny enough, the Chinese stock market in the past, if you look back on history, does rebound quite quickly, but we shall see. Maybe getting back to the level it was by the end of this year in December might be being a bit optimistic, but we shall see what happens. But I think long term, like I say, I'm a long term investor in these companies, so I'm looking at probably next year, and these things will improve and the stocks will get better, and I think that's where I'm going to really see a lot of massive gains on ththese companies, because like I said, I've been buying in at a lot of their low prices. So I think in the end I do quite well. So that's my situation on the Chinese stocks, and like I say, 20% of my portfolio is in that. So that's obviously, if I didn't have that in, then my portfolio would be a lot higher. But I'm confident in that position. So that sort of is the negative of my portfolio. Other things that have been doing well, I mean, everyone's been saying you should only stick to American stocks, etc., or UK stocks. And like I say, I've gone over this before with the whole China situation. It's very controversial, and people have their own opinions. And I've said I'm mad, etc., and I shouldn't be investing in this type of in other countries or like that. Well, the other flip side of that is that I also said way back in, I think, April, that I was invested in India, and I bought. I didn't buy any particular shares in Indian companies because I wasn't that familiar, and a lot of, especially on Trading 212, there's not a lot of Indian companies you can actually buy. But I invested in the iShares India ETF back in April, and I also did videos on that to say how China and India is a massive, massive market because of population and the growth of the country and the middle class, etc. My India ETF now is 24.5% up. The Indian market has been absolutely flying, and that's considering they've gone through some, big problems with the virus as well back in the past, and it was really quite bad there not so long ago. But the market just keeps on going up. It has shot up quite a bit, so I'm expecting at some point for it to pull back. So I might look at possibly increasing my position in that India market, because it has gone up a lot. But at the moment it's 24.5% up, which is fantastic, and that's done really well for me. So yeah, that's generally where I am for August in my portfolio. So yeah, let me know in the comments about your portfolio and where you are. Okay, thank you very much for watching. Hope you enjoyed my August portfolio trading 2 and 2 update, and I hope you got something out of it. Like I say, there's lots of things going on, and in all these series I like to show you exactly what's happening and the good and the bad. So I hope to see you soon. Take care.